Hey everyone, welcome back to Stocks Telegraph, your go-to spot for the latest stock news, trends, and all the insights you need to stay ahead in the market. If you're all about the stock market, you've come to the right place. Today, we're talking about a company that's been making some major waves in the energy sector, Eos Energy Enterprises, ticker EOSE. Now, with the world moving towards clean energy, EOSE is definitely one you should have on your radar. But is it worth your time and money? Is it a good investment? Let's break it all down. But first, a quick favor. Hit that like button, subscribe to the channel, and don't forget to ring the bell so you don't miss any of our latest updates. And hey, drop a comment below if you've got thoughts on EOSE or if you want us to cover any other stocks. We love hearing from you guys. All right, let's dive in. So what's the deal with Eos Energy Enterprises right now? Well, as of today, the stock is sitting at $6.24, and let me tell you, it's been quite the ride lately. Just last week, the stock shot up 23%, and over the last month, it's up nearly 49%. So what's fueling this jump? Let's break down the numbers. Analysts are actually pretty optimistic about EOSE. The average target price is $6.67, so there's still some room for growth. On the Analyst scale, where 1 means buy and 5 means sell, EOSE is sitting at 2.14, which is pretty much a solid buy. So it's not a slam dunk, but there's definitely potential here. Now, if we look at its 52-week high, EOSE is still about 15% below that peak, which suggests there's some room for the stock to get back to its highs, or even surpass them, if it gets its groove back. Now, here's where things get super exciting: earnings. Eos has seen some major growth in this department, with their earnings per share, EPS, up by 90.95% this year alone. And if analysts are right, they're predicting another 93% growth in EPS next year. That's massive, and it's a big indicator that Eos could be heading towards some serious profitability. And that's not all. Their sales have been booming too. Over the past year, revenue has grown by 37.6%. In just the past quarter, 58.42%. Talk about a serious growth spurt. But it doesn't stop there. EOSE is sitting about 41% above its 200-day simple moving average, which is a strong signal that the stock is either in or about to enter a long-term upward trend. But let's take a step back for a second and talk about funding and growth, because that's where things get even more interesting. Eos has been making some big moves lately, starting with a recent $22.7 million loan from the U.S. Department of Energy. This isn't just pocket change. It's part of a bigger plan to expand their manufacturing capacity. In fact, they've already ordered a second advanced manufacturing line, and they plan to have it up and running by 2026. This is all about meeting the growing demand for clean, long-duration energy storage. And with so many sectors looking for energy solutions, Eos is in the right place at the right time. And let's talk about how they're funding these efforts. Eos just raised a whopping $336 million through stock and convertible notes offerings. This money is going to help the company build a stronger supply chain and ramp up US-based battery manufacturing. Now, here's the crazy part. Both the stock and notes offerings were oversubscribed, meaning investors are super confident in Eos's future. It's like when a concert sells out in minutes because everyone knows the band is about to blow up. That influx of capital is a game changer. It's going to help reduce the company's debt and lower their cost of capital, which could save them an estimated $400 million over time. This positions them really well for the next phase of growth. But wait, there's more. Eos has been cranking up production. In fact, they've already shipped more energy storage units this year than all of last year combined. And Q2? They beat Q1's numbers, and they're expecting this momentum to continue for the rest of the year. They're also installing automation systems to make production more efficient. By the end of 2025, their new manufacturing lines will be fully operational, which is going to help them meet the demand for clean energy storage at scale. And here's one more exciting piece of news. Eos has secured a 3 megawatt, 15 megawatt hour Eos Z3 system order for a commercial microgrid on tribal land in California. This project is huge for a few reasons. Not only is it improving energy resilience in the region, but it's also partially funded by the California Energy Commission, CEC, which is a big win for Eos. California is a massive market for clean energy, and this partnership is just one of many. It's Eos's 8th project in collaboration with the CEC, so they're really building a solid footprint there. Okay, let's take a quick look at Eos's financials for Q1 of 2025. Revenue hit $10.5 million, which is up 58% from last year and 44% higher than the previous quarter. That growth is coming from increased customer deliveries, so demand is clearly there. However, the company reported a gross loss of $24.5 million for the quarter. But before you freak out, remember that's actually an improvement compared to last year, thanks to better production volumes and lower costs for their Z3 products. Now, operating expenses were up by 46%, mainly because the company is hiring more people to scale up production. A lot of those expenses were non-cash items like stock compensation and depreciation, so it's not all money going out the door. They also posted a net income of $15.1 million, largely from stock price adjustments, and their adjusted EBITDA loss was $43.2 million. But that shows a 145% improvement in margins, which is a positive sign as they scale up. And the balance sheet? Eos has $111.7 million in cash, giving them plenty of room to keep growing and expanding. Looking ahead, Eos has a $15.6 billion commercial opportunity pipeline. That's a 10% increase from last quarter and a 17% increase from the same time last year. They also have a $680.9 million order backlog, which means they're well-positioned for continued growth in the coming quarters. For the full year, Eos is projecting revenue between $150 million and $190 million, which is a huge leap from previous years, driven by their increased production capacity and ramping up automation systems. So what's the takeaway here? Eos Energy Enterprises is making some serious strides in the clean energy sector. With impressive financial growth, major partnerships, and ambitious plans for scaling up production, Eos is positioning itself to be a major player in the renewable energy space. They're not just meeting today's demand, they're setting themselves up to lead the clean energy future. Investors looking for a company with a strong growth trajectory and massive potential might want to seriously consider adding Eos to their portfolio. As always, hit that like button if you found this video helpful, subscribe to Stocks Telegraph for more updates, and don't forget to ring that bell. Drop your thoughts in the comments below. Do you think Eos is the future of clean energy storage? Or maybe you've got other stocks you want us to cover. And of course, share this video with your fellow investors. Thanks for tuning in, and we'll catch you in the next one.